as we get started this morning, just know that we are using Zoom today, so everyone's muted upon coming in, and we ask that you stay muted, use the chat for the first portion of this. Then when we get to the Q&A session, please feel free to unmute yourself, ask any questions, and same thing goes for the breakout session that we will have at the end. I'll go ahead and get started. I'm going to share my screen with everyone so you can see our presentation for today. Give me a minute. There we go. And like I said, today's topic is assessing and responding to financial risk. I'm here today with Pamela McGill of By the Books Accounting Services. She has been a really great asset to me during this time and answering a lot of the questions that I have. She is an accounting professional who has worked with Ernst & Young, Consul Energy, Bookminders, and she has owned her own business, which is By the Books, since June 2006. And so she works with a number of different organizations, and we'll let her talk a little bit more about that as we get further along. But for now, Pam, can you just say hello so everyone knows who you are? You might be muted.
Yep. Hello.
Great. So, like I said, we're talking about the financial impact today of COVID-19, and we wanted to bring you professionals to help you consider all the options you might have to mitigate the financial impact of this issue, and that covers a lot of different facets. Since I am not a financial professional, I do have two financial professionals here with me to answer questions, and I've also consulted with a number of financial professionals outside of this session to try and bring some of the most up-to-date information I have. So I may not have the most technical answers to things like the CARES Act, PPP, the EIDL, but we'll try and point you in the right direction for a lot of those things. Throughout the sessions, I've collaborated with a number of different organizations, so our partners are all here on this slide, and we have one more session coming up. This is the 5th of 6 sessions that we've had. Today, we're going to work through how to assess your financial status, working with financial partners to discuss aid and relief, and other relevant issues for nonprofits and small businesses that you may want to consider in regard to your finances at this time. I'm going to start out with assessing your financial status. One of the first places to start would be knowing and evaluating your budget and your debt levels. So what are the biggest expenses you have? What are your essential expenses versus non-essential? What types of things will you be investing in or need to invest in? And understanding the debt you have now versus any new debt you might need to take on and how you might manage that. The other thing to know is your savings. How many months of operating expenses do you need? How much do you have already? I know that a lot of organizations that I've worked with in terms of nonprofits have varied in terms of operating expenses. Usually organizations aim to have somewhere between 3 to 6 months. I know that there's many organizations I have that are working towards the 1 to 3 year mark as well, just so that they have a good amount of operating expenses in the case of unexpected situations like we have right now. But knowing what those savings currently are and knowing what your goals are is another great place to start in terms of assessing that status of where you are. Also analyzing if you do have any investments, how those investments are doing, and speaking with your financial advisors to understand exactly how you want to approach those investments going forward. Throughout all of this, just communicating with the stakeholders that are going to support your organization, your banks, your accountants, your lending organizations, all of the people who are going to have the more specific answers. I know many of the financial institutions that I've spoken with throughout this are looking for ways to help. The next place to go is understanding what needs you have. And that includes not only your immediate needs, but also your mid to long range needs. So if your organization was thinking about moving into a capital project of some sort, or any larger expenses, knowing what those are and understanding what those are. So when you go to your financial advisors, knowing exactly how you would like, what your goals are, and then sort of reevaluating how you want to approach that. And thinking about what those working capital needs are. So if you know you have operations and these are the operations of necessity, how do you meet those operations? Or if you have receivables, if you have inventory coming in, how are you handling those? If you have a rental of a space versus owning your own space, is your landlord willing to make accommodations, or is there some sort of agreement you can come to on payments? A lot of people are going through the same thing right now, and your landlord or the people who you owe money to may be willing to be more flexible at this time. They'd rather be able to make a certain number of funding and interest that's coming in for themselves, and they're probably willing to work with you on a lot of the issues that you're experiencing as well. If you are a place that has, say, a gift shop, or you're a business that sells product, how long do you plan on carrying your inventory? I know that we're all in a situation right now where we can't consume and as much as we would like, and I think that understanding that you may be carrying inventory longer and what that's going to mean for the different facets of not only your physical space, but your financial space as well. And then having your payroll documents and accounting systems all up to date, making sure that things have been reconciled with each of your accounts, knowing that that information is accurate will help you when you go to your financial advisors to know you have the most up-to-date information ready to go, and the information that you need in order to move forward with some of the aid and relief programs that are currently available. So to speak very briefly about those programs that are currently available, the CARES Act has a Paycheck Protection Program, the EIDL disaster loans, and there are a lot of relevant provisions within these loans for nonprofit organizations and their donors. One of the things that I wanted to touch on, because this is all information that you can find online. There are professionals more suited than myself to get you the detailed information on each of these loans and what you apply for. There's a great FAQ from Arnold and Porter, and the link is here, and as with all of the other sessions we've had, this information, the recording of our session today, the slides from the session, as well as all the resources will be up on our website afterwards, so you'll be able to access all of this. And that FAQ has some really great information that you can use to navigate your way through. But what I will touch on is the enhanced charitable deductions that the CARES Act provides. Under the CARES Act, there are two types of charitable deductions, itemized and non-itemized, that are given a bit more flexibility. So with the non-itemized, contributions of cash up to $300 made to charitable organizations or religious organizations are able to be deducted by individuals. So this is something that can increase giving for your organization if you have individual donors who generally donate cash to your nonprofit. Also, under this act, it increases limits for charitable deductions made by individuals who itemize their taxes. Current limits are in cash and are the current limits for an individual's tax deduction for charitable contributions in cash are suspended. Contributions made in 2020, making cash contributions fully deductible. This incentive also does not apply to contributions made to donor-advised funds, private operating foundations, 509s, and supporting organizations. So there are some limitations, but just know that there are increased limits on charitable deductions for itemized and non-itemized objects and donations to organizations, which will hopefully help nonprofits be able to maintain at least some level of donation through their organizations. There's also unemployment tax incentive for employers and deferrals for payroll taxes for employers. So please talk to your institutions and your lending organizations if those are things that you want to pursue. One of the other things that I wanted to touch on today before we get to our FAQ section is risk monitoring. I know that I have a few contacts in the financial world of credit card fraud analysis. And what they have told me is that the current situation is causing dramatic shift in customer behaviors. So they're seeing large spikes in cash withdrawals so people can have cash on hand. They're seeing a growing use of digital services by customers who don't typically use digital services. And oftentimes these are the behaviors that will trigger alerts for compliance officers who are looking for fraudulent activity. And the compliance officers, as they're trying to handle this situation, are planning to adjust transaction thresholds that also trigger these alerts. So making sure you're keeping a good eye on what's going on within your finances in your organization, just to make sure that you're also aware that some of these alerts might not be caught. So there is a little bit higher of a risk to organizations who are not closely monitoring that financial situation, because it may not be caught by a compliance officer if their organization is one that is adjusting those transaction levels. And that's just something to keep in mind to help mitigate your risk. The last thing I wanted to touch on was how to be proactive and prepare for different areas of uncertainty. We're obviously in the middle of a crisis right now, but there's things that we can do, which are keeping in touch with your financial institution. Like I said, they're the ones who are going to be the best resources for you and have the answers and be able to find the answers and help you to readjust what you're doing. Also, keeping together your important documents. If you have employees, keeping the payroll information. If you have your budget in order, making sure that budget is there. I know with one of the earlier sessions, we had our disaster management, and knowing that you have those important documents, whether in paper or electronically, and knowing that they're backed up or in multiple locations, somewhere that they're accessible, multiple places, so you know how to get those documents when you need them. Also, understanding your budget and evaluating what expenses are essential versus non-essential. There may be certain things that you're able to cut out of your budget to help you save a little bit of money during this time, and thinking about what those expenses are will be really helpful in helping you to streamline and still be able to fulfill your mission. The other thing is to make the most of financial services that you have on the digital side. So if you are able to deposit your checks via app, or you're able to do some online banking or transfers that don't necessarily include going in face-to-face. Also knowing that consumer behavior is going to be a little bit different. So you may have donors or supporters or customers and patrons that want to come in and purchase from you that would be more comfortable making some sort of digital financial transaction in the form of things. I know a lot of apps like Zelle or Venmo have these options to do those digital transactions. So thinking about how customer behavior is going to change based on this, and how people might be supporting patronage through those types of behaviors. Also, the last thing is just continuing to build your emergency fund. So if you're able to, keeping a area separate in your budget that just goes towards emergency funding, so that the next time we have a situation like this, you're prepared with a fund that is used for a situation where you know you're going to be short on cash, or you're going to need to cover certain essential expenses throughout the operation of your organization. So with that, I want to introduce